All right, guys, thank you for that. It's time now to welcome Mike Baudendistel, our retail, CPG, and intermodal expert to the show, talking all about J.B. Hunt releasing their earnings, what this means, and kind of the grander ecosystem of things. Mike, thank you for joining us today.
No problem. Good to see you guys. Yeah, that's right. A lot of companies started reporting earnings last week. I'm already sick of earnings, even though it's only been a week. So this time of year, I'm glad I don't have my former job as a sell side research analyst, having to write all the quarterly update reports. But as far as sort of what we learned last week about intermodal, I thought the biggest sort of single quote was J.B. Hunt saying that peak season this year is, quote, not going to be much of an event. I think that sort of said it all. And I have a chart on intermodal spot rates that was sort of leading me to that conclusion, even before we heard it from the company, if we can get that on the screen. And so this is an interesting chart, I think, from Sonar. We get intermodal spot rates in about 100 lanes. Now, not that much intermodal moves on the spot market, but I still think there's information in this data. And usually you see is something like, last 2 years, we've had a strong, peak season in intermodal. You've seen purple, how those rates surged at the end of the year. That was 2021. And green was 2020. You saw those kind of rise sort of throughout the second half. And this year in the white line, it's gone the other way. Sort of, this is normally the time of year where those rates would rise. And the reason those rates would rise is that sometimes carriers are concerned that they won't be able to have the capacity for their contracted shippers. And so they raise the spot rates, kind of price themselves out of the market, particularly in certain lanes like, let's say, LA to Dallas, LA to Chicago, et cetera, but really hadn't sort of seen that this year. And so that suggested, to me that, okay, this isn't good. This isn't going to be a tremendous, peak season. Some of the other things that kind of go into that is there was a lot of discussion from Union Pacific and CSX on their respective earnings calls that there's a shift from domestic intermodal back to international intermodal. Now, those segments, have been moving in opposite directions really for a while, and for the most part, that domestic side of the business had held up, much better. So that's moving the 53-foot containers, and the reason for that is, we went through this period of tightness on the ocean. There weren't enough, ocean containers, and so that encouraged the transloading from international containers into domestic containers. Now, as we've written about, those international container markets have loosened up, and now it's encouraging less transloading from international containers into domestic containers, and so the ocean carriers are sending more of those containers intact into inland destinations, and that's part of why a domestic, intermodal provider like a J.B. Hunt, Hub Group, et cetera, not going to see the big, increase in seasonally that they normally would during the peak season. So that that has a pretty big, impact. Could also have an impact on some of these inland, destinations where it just leads to more congestion if you have all these international containers sort of taking up space. There's still sounds like there's some areas of congestion in terms of at some of these inland terminals and issues with not having enough chassis. It seems like a lot on the service side of things, service has improved, but not where it should be. I think BNSF has had a marked improvement from a very poor level. You can see that in the data that the Surface Transportation Board provides on delay days, but still sort of running at suboptimal levels. I think Union Pacific said that 62% of the containers were on time in the third quarter, which still is not a great percentage. Now, maybe it's less critical with the high inventories that you were just talking about on the retail side. Maybe they don't have to be on time 100% of the time, but still there's some issues there in terms of service, and I think in general, intermodal markets are softening up in addition to the truckload markets. Was interesting to hear Union Pacific talk about the impact of the loosening truck markets on their intermodal business, because those lanes that are on Union Pacific are longer in the West than they are in the East. And so those lanes tend to be less competitive normally with the truckload market than what you've had in the East. Now, in the Eastern lanes, those lanes have been competitive across modes for some time, but thought it was a little bit of a change with what Union Pacific said. And as far as sort of the so what, if I'm a shipper, if my CPG fans are listening to this, have a chart on the intermodal contract rates that we can bring up that. So I think all this will translate into lower intermodal contract rates sort of next year. So the bid season tends to be the first part of the year. And you've seen last 2 years, you've had double-digit increases in intermodal contract rates. That's before fuel surcharges. Now we're lapping the strength of last year, and those have been kind of flat to down this year, sort of much different pattern the last couple of years where those rates have risen sort of throughout the year. So I think, if you tend to have a muted peak season, you get into next year, that can lead to a rate decline. So I think, shippers should be more aggressive. All this data sort of suggesting that.
Mike, one of the things that, of course, stuck out to me during what came out of J.B. Hunt is the fact that management's saying, hey, we came off of another stellar quarter for Q3, but you know what? We are not optimistic, not hopeful, and honestly very cautious looking forward. What does that sentiment coming out of J.B. Hunt's management after another stellar quarter from them kind of tell you about the broader state of the freight space right now? Are we truly going to see this freight recession that we've been talking about for a while? Is that something that is now on their radar, despite coming off of yet another great quarter?
Yeah, so the thing that really stands out is just how different that tone was versus the previous 2 quarters. So the previous 2 quarters, they really put a positive, their comments were really optimistic, and they put a positive spin on things. Even their second quarter results, I thought they were very optimistic, and now it was just sort of this change in tone. So clearly they saw something in the market that changed rather dramatically from July through October, and I was actually a little surprised that there weren't more publicly traded companies that came out in September and pre-announced. I mean, we did have that huge FedEx pre-announcement, but a lot of those Wall Street conferences are in September, and we really didn't have a lot of cuts to guidance there. I thought a lot of them would stand up and say, well, okay, we have to cut, and I thought there would be more FedEx-like announcements, but definitely when typically publicly traded companies tend to put a positive spin on things. So when you hear sort of those frank comments from J.B. Hunt, I mean, it really suggests that there's a weakening in the market.
Definitely interesting, as well as you mentioned, Mike, that change in tone from this call compared to the one before it. Before we let you go, any news or anything that you're watching closely, specifically within CPG?
Yeah, a couple of those companies reported last week too. Nestle, I thought did really well. I mean, similar to the comments earlier on retail, things in the premium category seem to be doing really well, and Nestle, is much more focused on that now than they were. About a third of their business is in those premium categories. And then Procter & Gamble reported, and what's interesting there is they're seeing greater elasticities. So consumers are changing their behavior a little bit more than they were in response to these raising higher prices, even for things that you think about as being sort of typical consumer staples. I think consumers are trying to find ways to cut back on specifically on things where they don't taste a certain way, like Procter & Gamble soaps. I think you can trade down without impacting your lifestyle too much, but definitely seeing more elasticities creep in as consumers adjust more to increases in prices that are up double digits in a lot of products.
Awesome. Well, Mike, thank you so much for joining us this morning. Insightful and amazing as always. When can people catch you on your show, their podcast, Stock Out?
Yeah, so it's this afternoon at 2 p.m. Eastern, and have Kevin Williamson. He's the CEO of RJW Logistics Group. He's going to talk about how CPGs can do things like avoid on-time and in-full fees from the retailers, improve their supply chain selling into retailers, and things of that nature.
Awesome, Mike. Well, I'll certainly be tuning in. Thanks so much for joining us this morning, and we'll check in with you a little bit later.
Okay, see you, Anthony.
Yeah. Right now, we're going to go over to the wall because we have our next weather update with a woman with many talents, Kaylee Nix.